What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this update is, as always, we're going to be taking a look at the most up-to-date Ortex short interest and utilization data. We're going to do a tiny bit of options chain analysis. We have some really solid box office news and a very, very bullish and positive analyst rating on the movie theater industry as a whole. We have the SEC coming out and basically admitting that the way our market is functioning at the current time is not good. Retail investors are getting screwed over every single day. And again, we are going to have to wait and see what comes of all of these new SEC investigations and inquiries. But with what we have seen so far, the ape community has really started all of these steps in the right direction. And I think that is something to be very proud of. Now, the last thing that we're going to need to go over is this lawsuit between Citadel and the SEC today. Now, a lot of these concepts and the things being discussed, this limit order, it really hinges upon this trading strategy called latency arbitrage. I think a lot of people are still confused about exactly what this means. So we're going to go over some of the most important comments that I saw and just get a better understanding of how latency arbitrage works and why it is not beneficial for retail investors. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but the more people that we have staying up to date on accurate AMC information, the stronger our community becomes. And if you guys want to see more videos like this, make sure you hit that subscribe button and make sure you turn on that notification bell as well. So at the current time that I'm recording, AMC is hovering right around this $37 mark, up about 1% on the day. At this point, very solid way to start the week, but there is about an hour and a half left in the trading day, so the prices can change. Now, when we come over to this Ortex data right here, let's do a quick refresh to get a more up-to-date estimate. We have utilization at 86.01%, and the estimated short interest as a percentage of the free flow, 16.24%. So what we're looking at here is nothing is really changing in terms of the Ortex data, but what we can tell from this is that the shorts have not covered their position. So nothing has really changed. I know we saw a lot of FUD, fear, uncertainty, and doubt over the last week or so, and those things are going to happen, but it is really helpful to just keep your blinders on, continue on the path that you have set yourself out on. If you have done your DD and you are confident and have conviction in this play, then there is nothing anybody else can say to deter you from that. Now, when we come over and take a look at the option chain, as predicted, we are seeing some more contracts getting added in terms of people buying and holding contracts, which is reflected in these open interest numbers right here. Again, options incredibly risky, but what we are seeing for this week is there's nothing too crazy in terms of setting up for any type of gamma squeeze. We are really going to have to wait for those big monthly options expiration periods like we are seeing here on this November expiration date. There's already 136,000 contracts out of the money, and that number is going to increase over the next couple of weeks as people speculate and gamble on the price point of AMC by that date. Now, when we come over to this article right here, Dune nabs 40.1 million at the North American box office. Very, very solid numbers. But when we come down here, I think this shows that passionate moviegoers are supporting the big screen experience, says this individual, Paul, not sure how to pronounce his last name correctly, a media analyst at ComScore, which tracks box office data. You could sit at home and press a button, or you could go to your local multiplex where this movie was intended to be seen. I think also this proves that the theater experience can stand up to any challenge, whether that challenge is the pandemic or the availability of a title at home on the same day. This is a very common theme that we have been seeing with AMC and all of these other movies over the last couple of months. Even the movies that get released on the streaming services, they still perform relatively well in the theaters as well. And when you combine that with these exclusive windows that AMC is entering into, these deals, they have one with Warner Brothers that is going to be starting in 2022, and then potentially Netflix in the future. That is speculation at the current time. But that's all really good fundamental news for the company that is way better than having bad fundamental news. I know a lot of people really like to harp on the point that this is a short squeeze play and the fundamentals do not matter, but when we see continuous good news come out from the company, it is eventually going to put a lot of pressure on these over-leveraged short institutions, which just benefits us as long retail investors. Now, when we move on to these comments from the SEC, this article right here, it's almost comical what they title this. Meme stock trading restrictions, not good for retail investors. Yeah, obviously, if you cut off one side of the market and you mess with the supply and demand metrics, everybody is going to lose a lot of money. So the title, kind of stupid, but when we come down a little bit further, we can see the report suggested that shorter settlement times could reduce the likelihood of unexpected margin requirements. We know this by now. We did go through this in the GameStop report, but Gensler told Yahoo Finance that among other policy considerations, banning the practice of payment for order flow remains an option. Now, it's not necessarily payment for order flow itself that's the problem. It's what is done with those orders, that order flow, once it's paid for and received by these market makers, and that's where we get into this concept of latency arbitrage. So when we come over to this brief explanation of what latency arbitrage is, I think this describes it very, very well right here. Assume you are a trader who wishes to purchase shares of a company ABC. The best bid is currently 10 and the best offer is currently at 11 for the stock. And so you decide to place a buy order at the midpoint 10.5. So the bid $10, the ask $11. You are putting your bid right in the middle. But then before you can place the order, the price feed has refreshed and it currently reads the bid as now 9.5 instead of 10 previously, and now the offer, so the ask, is going to be 10. This information takes time to reach your trading terminal or platform due to the higher latency of your network connection, and so you still end up seeing the old bid and offer rates for the stock, which is 10 and 11, but the actual bid and ask spread is lower than that. So what the institutions are able to do with their basically high frequency trading setups, they get their servers as close as they can to the exchanges. They're using lasers, fiber optic cables to make sure that they have the fastest and lowest latency possible. So what they can then do is go out in the open market where they are seeing the actual bid and ask spread, buy the shares for a lower price and fill your order at a higher price. So they are buying at a lower price and then selling higher to you, but it's milliseconds. So when we think about payment for order flow in this new IEX D limit, what the D limit is going to be able to do is when it senses that the prices are changing in that way, it's going to automatically adjust your bid to make sure that you are not getting manipulated by these high frequency traders, which is an awesome step in the right direction. And it is very easy to see why organizations like Citadel are upset about this, because when you think about payment for order flow and what they are doing with those orders, this concept is essentially front running. So if they are no longer able to front run your orders and make that fraction of a penny on every single order, then they are going to lose out on a very significant amount of revenue. And this is going to be a very large problem for these institutions. Now, when we come over here, shout out to Dave Lauer for really putting out some of the key pieces of the court hearing today. So the court essentially said, are you saying the 40% of Citadel trading they claim is on behalf of retail investors could be latency arbitrage? And IEX responds 100%. The only people able to exploit the microseconds in question here are firms like Citadel. Now, we know that market makers do this. This is kind of how their whole business model operates, but it is very good to see it confirmed in a legal proceeding. Now, coming over here, every time the Citadel lawyer criticizes D-Limit for repricing displayed orders, keep in mind D-Limit is only doing so when the price is stale, meaning that the current NBBO, the national best bid and offer that we are seeing, is no longer the actual national best bid and offer because it has changed, but due to that higher latency, we just aren't seeing it yet. So the fact that IEX has come out with this new type of limit order and the technology to really combat high frequency trading in our current marketplace is going to eventually make our markets more fair. This is an awesome step in the right direction. And if we can see institutions that have essentially been leeching off of retail investors for years start to pay the price for those actions, I think that is going to be a really solid step in the right direction. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button. So I hope you guys are having a great day, and I'll see you guys in the next video.